parts of that statement. Mr. Speaker, starting with tax. This year, the government will make significant changes to the New Zealand tax system. We will announce the details of these measures as part of the budget in May. We want a tax system that drives economic growth and the creation of jobs, that creates incentives for people to work hard and to get ahead in New Zealand, that boosts savings and increases the productivity of investment, that is regarded as fair and relatively simple to administer. We agree with the Tax Working Group that this is not currently the case. In particular, we agree that New Zealand relies heavily on taxes most harmful to growth, particularly corporate and personal income taxes, that there is a hole in the tax base around the taxation of property, that the tax system lacks integrity and fairness because of differences in the treatment of entities, and that there are significant risks to the sustainability of the tax revenue base. Mr. Speaker, tinkering over recent years has made the tax system more complicated, led to poor incentives and created a raft of different ways for people to minimise their tax payments. Given this, it is any wonder that our economy has tilted towards consumption and property investment, that we have a shortage of savings and that a high proportion of New Zealand graduates live overseas. We are looking at possible reductions across the whole personal tax structure, not just for the taxpayers on the top rate, as has been suggested by some. However, Mr. Speaker, some of the reforms discussed by the Tax Working Group are not favoured by the government and are therefore off the table. In particular, we will not be developing any proposals for a land tax, a comprehensive capital gains tax or a risk-free rate of return method for taxing residential investment properties. However, the government does believe there is a gap in the current tax system around property investments where income is being derived but no tax is being paid. In fact, the government is actually losing revenue in this sector. Mr. Speaker, we will therefore be making changes to the way that property is taxed, which will result in increased revenue and more fairness for taxpayers. The government is also carefully considering a modest increase in the rate of GST to no more than 15%. We are acutely aware of the effect that a rise in GST could have on lower-income families if not balanced out by compensatory changes elsewhere. Therefore, Mr. Speaker, if an increase were to occur, it would have to be accompanied by across-the-board reductions in personal taxes, as well as upfront increases in benefits, New Zealand superannuation and working for families payments. Mr. Speaker, these changes will allow New Zealanders to take home more of their own income, and don't they deserve to do that? They could therefore, Mr. Speaker, use that income to save or to pay off their mortgage without being taxed on it. Saving and investment, Mr. Speaker, would therefore be encouraged rather than consumption. GST is also a very difficult tax to avoid, no matter how people structure their financial affairs. As David Lange once observed, even drug dealers pay GST. No final decisions have been made about raising GST, and the government has asked for more work to be done on this. But it is suffice to say the government would not embark on a policy of increasing GST unless it would benefit the New Zealand economy in the long term and unless it saw the vast bulk of New Zealanders better off. Mr. Speaker, the government is not considering a major change to the Working for Families scheme, but we are concerned that some people are using income structuring techniques to gain eligibility to a scheme that was never intended for them. This runs contrary to the policy intent, and the government is therefore looking at how to make Working for Families fairer in this regard.